Hello and welcome to another weekly portfolio update. This is week 38 of my investing journey in my Trading212 ISA. And this is another bad week, third or fourth in a row now I think. Starting the week at around an 8% return, with a massive drop off midweek down to about 6%, and then continuing to bleed out slowly throughout the week, finishing around a 5.5% return. So let's look at how each of my holdings performed this week, and as always we'll start with the ETFs and my largest holding, which is VUSA. As you can see, VUSA was down 1.79% this week, and in fact looking at it, 1.4% of that was on Friday, so I'm not really sure why I pushed back my buy day to next week this week, and this is evident by the chart as well. At the start of the week we were still above this 50-day average, but on Friday we gapped right down. Looking at this chart, I probably should have picked up some more VUSA, despite the fact it's slightly overweight in my portfolio, because it's probably a pretty good opportunity to have bought. Though for some reason I decided to push my buy day into next week, just out of fear that the market was kind of dropping at the start of the week and then correcting towards the end. And additionally, VUSA is currently overweight in my portfolio, so probably these reasons combined is why I didn't pick up any yesterday. I should have received dividends from this week, however 212 were pretty awful at obviously paying them out, as I think they're now like 3 or 4 days overdue, or 3 or 4 days since Vanguard paid them to Trading212. I did however get paid dividends for Vanguard World, and that is my next holding and the next ETF on the list. As you can see, very much a similar pattern to VUSA. Started the week just above this 50 average, and as the week went on kind of dropped below slightly, and then massive gap down on Friday. And again, thinking about it and looking at the charts, I probably should have just continued to buy as I usually do on a Friday, but we will see whether or not it was been a good decision or not to try and time the market this week. I did receive dividends this week from VWRL, £11.75 in dividends, so that's a nice addition. And I don't really understand why Trading212 didn't pay out all Vanguard dividends at the same time, but yeah, hopefully I shall get those on Monday. Not really a lot to say for Vanguard World. The other ETF and next holding we'll look at is EQQQ, which again has a very similar chart pattern, dropping all week and then a huge gap down on the Friday, falling 1.5% on Friday, 2.7% on the week, so 2.7% down this week, with majority of that coming on the Friday alone. So really I probably should have bought on Friday. I think I also received dividends from EQQ this week. I did, which was a massive £1.42, so probably about £13 in dividends total this week. And that's about all I really invested this week. So not a lot to say about EQQ, though I do think both the American markets and global markets recovered at the tail end of Friday, so I suspect we're probably going to open up and I'll get punished for trying to time the market next week. So that wraps up ETFs for this week. So we'll now move on to my largest individual holding, which is GOOG, or Alphabet Class C. Very similar pattern this week to the broader market. Down at the start of the week, recovered slightly at the end, finishing 2.41% up on Friday, however 4.35% down on the week. And in fact, we did pass below this kind of threshold that, or market I've got in place for GOOG at 2700, 2705. I didn't, however, buy, and this seems to be a recurring story at the minute on these videos, where I've got buy markers in place. However, I have pushed all my buying this week back into next week, as I'm trying to somewhat time the market and buy dips at the start of the week. And realistically, I probably should have bought when it dropped below this 2700. However, it is at about target allocation of my portfolio, so I've decided to hold off for now, although I will certainly be buying some Google next week, regardless of which direction it travels. So in the news for Google this week, YouTube are to remove all anti-vaccine misinformation. I think this is primarily due to regulatory and government pressures. I think much like Facebook continuously flags warnings on any kind of post which even briefly mentions COVID or vaccines. Big tech are very much pressured into removing this content. I'm not really sure if I agree with this, and I actually think this somewhat hurts the company in terms of freedom of speech and giving people the freedom to kind of research and look at information for themselves. Whether or not I agree with the content is a completely different story, but I do think this is going to hurt somewhat traffic to the site, and people that are looking for that content are now going to be forced to look outside of YouTube or outside of Facebook and look to places which perhaps have no kind of fact checking whatsoever. But I don't really think this is kind of meaningful in any way whatsoever to Google's profitability or investing in Google. I just think it's a interesting thing of like continued moderation and restrictions in terms of content. And in fact, they're going to ban accounts which do promote this kind of anti-vaccine content. So it's going to hurt creators on their platform. Additionally, and perhaps bigger news, Google is slashing the amount it keeps from sales on its cloud marketplace. So currently, Google takes a 20% cut of any revenue generated by third-party developers on the Google Cloud platform, and they're reducing this share down to 3%, which is like massive drop. And this is going to benefit developers on the Google Cloud massively, and is not really likely to impact Google's overall profitability or revenue, as the majority of their revenue currently comes from advertising. So this could be really, really good thing for Google as they try and increase take-up of their cloud's offering and continue to steal market share away from like Amazon Web Services and Microsoft. So yeah, I think this is good news for Google and should probably help really push that cloud growth in the years to come. So if we now move on to Facebook, my second largest holding, which has quite a similar chart this week, which it is down 2.8% this week, however finishing 1% up on Friday. Facebook has fallen below this marker I've put in place. However, I don't think the fundamentals of Facebook are the same as when I first put in this marker. I think the news last week about potential iOS headwinds has kind of changed the picture somewhat for Facebook. So at this point, this doesn't trigger a buy for me, and probably won't do until we have a better idea of how Facebook are dealing with the challenges at their next quarterly earnings. So for now, I'm quite happy to just maintain my kind of target allocation of Facebook and not try and force myself to pick up more shares when it drops below these markers. Although, if it does drop those 334, I'll probably pick up a small amount, though it will be very much in line with my target allocation as opposed to just a buy now, think later kind of deal. Big news for Facebook this week. Facebook are launching Reels on Facebook as opposed to just Instagram, and I think this is really good news for Facebook, as I think currently Reels are a huge part of the viewing and engagement amount on Instagram, and I feel like Reels could probably help reinvigorate kind of Facebook as a platform outside of Instagram. And I do see this as being kind of a great thing for Facebook, and I hope that if the trial goes well in the US, that this will be rolled out and could really help Facebook take some of the market share back away from other video platforms like TikTok and Snapchat. Somewhat bad news or good news, depending how you look at it this week for Facebook, is that Instagram have paused their plans of Instagram for Kids. I'm not really sure this is a huge deal, as it's not really a platform which is active right now, though it is obviously something that Facebook have poured money into developing. I do think that capturing the younger generation under 13s is something which would be great for Facebook's long-term growth, and if they were to develop a platform which was successful for kids, then that would be fantastic as a shareholder, though I don't think it really makes any significant change at this point to the kind of fundamentals of the stock or what investors should be doing. But yeah, it's worth noting because it is another kind of major project which has kind of received a lot of bad PR, which may affect the stock price in the short term. I think that's it for Facebook this week, which then brings us on to Amazon. The story is very much the same for Amazon as always, just continuous sideways consolidation in this quite large range, although this week is almost exclusively down for Amazon, 4.2% down in fact, and in fact, whilst a lot of other stocks rebounded on Friday, Amazon still finished down by 0.17%. And we're actually almost at the point where I'm at a loss on Amazon, and in fact I think I am at a loss on Amazon if you take out the Forex impact. So not really a lot to say or do about Amazon in terms of buying. Like if it drops below this 3100, I'll probably pick up a small amount, but at this stage I'm just waiting, as is I think the entire market, to see what the numbers are like at Q3. And I'm not really expecting great things, to be fair. This is very much a long-term play. In news for Amazon this week, they announced Astro, the home robot. Again, I'm not really sure whether or not this is a great thing for Amazon, and certainly the market doesn't seem to think so. Like, there was no huge spike or movement in Amazon following the announcement of this. I think this is just another throw out there and see if it sticks play by Amazon. If it takes off, great, but probably not. I can't see myself ever having one of these in my home, certainly not in the format that it's in. So yeah, I think this is just a gimmick by Amazon really, and I don't really think a lot of this. I think that's pretty much it for Amazon this week. Much more of the same, just trailing sideways, somewhat down, and yeah, that's it. So on to Coinbase. Coinbase has had a kind of odd week, being 0.3% down overall. I think it was actually my best performing stock on the week, despite also being down, finishing with a 1.64% rise on Friday. Kind of underperformed this week and is way below the threshold again, despite the fact that Bitcoin increased, I think, 10 or 11% on Friday. Coinbase saw almost none of that benefit, which is somewhat surprising. However, the news out of Coinbase this week kind of tells us why it didn't react positively. And the main news out of Coinbase this week, I would say, is hackers have stolen cryptocurrency from at least 6,000 Coinbase customers. And as far as PR goes, I think this is probably about as bad as it gets. If you're an exchange or a bank or anyone like that deals with people's assets, someone stealing assets from your platform is not the way you want to market yourself or grow as a business. I'm not sure what the value of the loss was. However, this is certainly not a good thing for Coinbase, and in fact is likely to put people off Coinbase in the short term, at least, in favor of other crypto brokers. Maybe even like PayPal now they're in the game as well. So yeah, this is really bad news for Coinbase. I don't think it's going to massively impact the Q3, and in fact I may look to sell out of Coinbase after their Q3 earnings, assuming they have a positive or moderate response to their earnings, as I think long term the kind of headwinds that Coinbase are going to face in terms of like regulatory challenges as well as competitors is likely to hit them quite hard. Additionally, this week for Coinbase will soon allow you to direct deposit your paycheck into crypto. This is good news for Coinbase, I guess. I don't know. Like, it kind of allows people to automate money into Coinbase as they get paid each month, which is good for Coinbase because people may just set and forget. Although I don't see many people are likely to do this, but I may be wrong. So it'd be interesting to see what the take-up is of this and whether or not there'll be any indication of this or talk about it at their Q3 earnings. So it'd be interesting to see how this develops, but I don't see it as a huge driver for Coinbase. So that wraps up Coinbase this week, and we'll now look at AMD. I believe it's very much the same story for AMD as the other companies this week. Down overall on the week, and as you can see, we have fallen below this marker that I've got in at 102 or 103. But much like all the others this week, I haven't bought, as I have pushed back my buy day into next week. So it's likely that I will pick up some next week, regardless of whether or not it's up or down. 3% down on the week, though there is some good news out of AMD this week. First of all, Google Cloud is going to use new AMD EPYC processors, which again is a great way, an indicator for AMD stealing market share away from Intel for these like corporate clients and server uses. So this is really good bullish news. And in fact, I'm not sure how long the contract for this is going to be, but could potentially deliver good growth for AMD over the next coming years if they're successful in this partnership with Google. In addition to this, Elon Musk has tweeted this week about how wonderful it is to work with AMD. AMD has been great to work with, and additionally, the CEO of AMD, Lisa Su, expects the chip shortage might end or improve by the end of the second half of next year, which is bullish for AMD, I would say. Additionally, it's just good PR for AMD to be praised by Elon, and there's certainly an Elon effect to stocks, and I think we saw this in the week. Yeah, this green candle on Thursday, I think there was a 4% like intraday rise after the tweet kind of surfaced. However, that quickly fell away with the rest of the market at the end of the week. So yeah, good news for AMD this week. I do expect them to have a very, very nice third quarter, and I will continue to accumulate AMD over the coming weeks. And finally, we come on to my leveraged ETFs, which are my smallest holdings currently, and we shall start with EQQQ3, which again, massive red candles at the start of the week, slight green candle on Friday, although it definitely gapped right down, and in fact finished 3.3% down on Friday and 10% down on the week. I did purchase a small amount of leveraged ETFs again this week, some midweek, I think on Wednesday or Tuesday, on this big red candle, and another small amount on Friday. And I'm just going to continue averaging down once or twice a week on these as their daily leveraged ETFs, so they benefit from kind of more frequent dollar cost averaging. And I will just continue incrementing small amounts. So yeah, really rough week this week, and as you can imagine, any small movements or even moderate movements in the underlying index, and you're going to get absolutely battered. And this is the risk you take with leveraged ETFs, and is why they don't advise holding them for longer than a day or a couple of days. So far, getting absolutely smashed on these leveraged ETFs, with QQQ3 being 8% down already since initially purchasing it a few weeks ago. Much similar story for 3USL, which is 3 times leveraged S&P 500, although I'm only 5% down on this, and much like QQQ3, I have been averaging down like once or twice a week on this. Every time I purchase the 3 times Nasdaq, I do purchase the 3 times USL to kind of keep them balanced, because I want them at a 50-50 split in terms of my leverage positions. So this was also down massively this week, almost 8%. So yeah, again, this is the risk you take with leveraged ETFs, and this is a risk I'm willing to take, and I shall continue to take. And hopefully by the time I've accumulated quite a large position in this, more than the current £33, that the market then starts to massively roar upwards, and I'll reap the benefits of having a leveraged ETF. But at this point, it's just continuously losing money and continuously losing money at a very, very fast rate. So yeah, I wouldn't advise buying leveraged ETFs, certainly not for longer than a day, unless you have the stomach to kind of hold and deal with the massive drawdowns, which I'm currently seeing since I very first bought these leveraged ETFs. So yeah, that wraps up the holdings for this week. So in summary for the week, I invested £15.97 and I got £11.75 in dividends from Vanguard World, although I'm still waiting on dividends from Vanguard USA, from Trading212, because they're notorious for paying them late. I had an unrealised loss this week of £451 or 2.2%, and I think this is the, let's say, 4th week in a row of downward movement for the portfolio. So hopefully, yeah, next week things start to turn around. But that's it for this week. Thanks as always. Please like, subscribe, and comment, and I'll see you next week.